More people than ever say they're never really going to retire. Well, at least not in the traditional sense. But if you plan to keep working while collecting Social Security, there are landmines that nobody has warned you about. And we're going to cover that today on the Howdy Neighbor Retirement Show.
It's the Howdy Neighbor Retirement Show.
Howdy neighbor, I'm Michael Andrews with Andrews Insurance and Advisory, and you are listening to the Howdy Neighbor Retirement Show, where we tackle real-life questions about Medicare, retirement, and Social Security every single week. Today is another Michael tutorial, and we are talking about working in retirement, what it does to your Social Security check, your tax bill, and your health coverage. So I host Social Security webinars that go out all over the country. I've had people register from Hawaii all the way to New York City, and in those webinars I get some version of this question constantly. Michael, I'm going to keep working a little bit longer, so I figured that I would just start my Social Security at age 62. And listen, I understand the thinking, but that sentence usually has 2 or 3 problems buried deep inside of it. So let me ask you this. Are you planning to keep working, even part-time, after you start Social Security? If so, this next part matters more than you think. The first problem that we run into is what's called the earnings limit. If you claim before full retirement age and you're still working, for 2026, you can earn up to $24,480 before Social Security starts withholding your benefits. If you go over that, they end up holding back $1 for every 2 above it. In the year that you hit your full retirement age, that limit jumps to $65,160. Only counting earnings before the month that you reach it. After full retirement age, the limit disappears. It's not gone forever either. Social Security recalculates your check later and credits you for what they withheld. Most people don't know that part, and they just assume that they've made a mistake that they're not going to be able to fix. The second problem that we run into, and this is one that I see constantly with clients that are still years from taking Medicare. If you leave your job at 62 and you've also left your employer health coverage behind, Medicare doesn't start until age 65, so now you've got a 3-year gap that needs real health insurance, and that gets expensive fast. Do you even have any idea what health insurance actually costs on the open market for folks between 62 and 65? Most people that I talk to are legitimately shocked. And this is a piece of my practice that I care about, because I'm a licensed insurance agent, and helping people bridge that healthcare gap from 62 to 65 is something that I work through with folks regularly. Some try part-time work just to get a group health plan, but that income can trigger the earnings limit problem that we talked about earlier. Others buy a private policy, and I've seen those premiums eat up close to the entire Social Security check in itself. That 3-year window deserves its own conversation before you ever decide to file early. The third problem that we see, and this one catches people even after full retirement age, is that once the earning limit disappears, people assume, well, there's no more downside to this. But it still comes down to total income. If your combined income, adjusted gross income plus non-taxable interest plus half of your Social Security check, tops $25,000 if you file single, or $32,000 if you file married, then up to 85% of your Social Security can become taxable. So working can still cost you, but this time it's just through a different door. Do you have any idea what your combined income actually looks like once Social Security gets added in? That number decides how much of your check the IRS gets to touch. So where does this leave you? Waiting until 70 grows your benefit roughly 8% a year past full retirement age. And for some people, that is absolutely the right call. For others, taking it early and putting that money to work makes more sense depending on health, other income, and the overall plan. There is a break-even point, and for married couples, it often makes sense to stagger claiming. One spouse earlier, and then the other delayed for the bigger survivor benefit. Social Security was never built to be your whole retirement income. It's roughly designed to cover about 40% of what you should need in retirement. It's still money you earned over a lifetime, but when and how you take it, especially while working, is not a one-size-fits-all answer. So today we talked about what happens to your check if you claim early and keep working, why the health care gap between 62 and 65 catches people off guard, and how working income can still make your Social Security taxable even after full retirement age. Claiming Social Security is one of the hardest decisions to reverse, so it deserves real planning and not just a guess. So that is why I built the Work and Claim Strategy session. This is a focused look at 5 things: how the earning limit applies to your income if you claim early, your realistic healthcare costs before 65, how much of your Social Security would be taxable, your personal break-even point between claiming early and waiting, and if you're married, how staggering your claiming ages could strengthen your survivor benefit. So if you've got a question that you would like for me to tackle on a future episode, if you could, shoot me an email at michael@andrewsadv.com. I read every single one of them, and I just might answer yours on a future episode. You've worked hard to build your retirement, and you don't have to make these decisions alone. If you want the Work and Claim Strategy, click the link in the description to schedule a time. It doesn't cost anything for me to take a look, but not letting me, that could cost you thousands. So if you're ready to take this relationship to the next level, you can call or text me at 918-842-739 or schedule a time on my calendar at andrewsadv.com. And wherever you're listening, whether that's radio, YouTube, or Facebook, make sure you subscribe and follow the Howdy Neighbor Retirement Show so that you don't miss next week's episode. If this helped, give it a like, share it with a friend who could use some good neighborly retirement advice. Thanks again for listening, and we'll see you next week right here on the Howdy Neighbor Retirement Show. Thanks.
It's the Howdy Neighbor Retirement Show, helping you plan so your money will grow. No need to worry, we'll make it clear. Medicare